Hello, traders. As you are well aware, oftentimes analysts use the terms like a bull or bear market to describe the main trend. When bears are in control, we see a decline in quartz. However, when bulls take the upper hand, we see a rise in the price. Nevertheless, market experts believe that psychological factors play a greater role in shaping trends. The fears and hopes of investors, the expectations and outlooks on the future conditions have a bigger impact on the market sentiment than mathematical calculations. Traders' reaction to, for instance, some hints from officials, their statements, or even tweets can change the trend dramatically in the shortest period of time. Curiously enough, there are few investors who can impact the market sentiment without the majority of other traders. One of them is the tech genius Elon Musk. Yesterday, the US market halted a 3-week decline after the announcement that Twitter accepted Elon Musk's Beyond deal. The Harvey Tech Nasdaq index has finally erased some of its losses amid this news. Yet investors remain rather cautious. Now they have even more reasons to be on guard given the epidemiological situation in China. Shanghai, the financial hub of the country, has been in a strict lockdown for almost a month, while the government is trying to curb the virus spread. Yesterday, Beijing kicked off mass testing for millions of residents after a spike in COVID cases. It means that the authorities are likely to extend lockdowns, which may result in a slowdown in economic expansion and supply chain disruptions. In other words, the country could again face the same problems it has already dealt with after the pandemic. The prospects are rather grim. Likely, there is some positive news for the equity market as well. The earnings season is in a full swing. Of the 102 companies in the S&P 500 index that have reported first quarter results, 78% have beaten earnings estimates. For comparison, usually this figure does not exceed 66%. It appears the US economy remains strong despite the headwinds. The US dollar is the king as well. Traders are flocking back to safe haven currencies amid expectations of several rate hikes by the Fed, pre-launched lockdowns in China, and geopolitical uncertainty over Ukraine. This is why the US currency as a safe haven asset is rising steadily. Since the beginning of the month, the US dollar index has already jumped by 3.3% against its main rivals. Moreover, yesterday the index added almost 0.6%, rising to a 2-year high of 101.86. In today's Asian session, the greenback slightly retreated. However, there is no doubt that it will reach new peaks quite soon. Analysts are betting on the level of 102.99, which is the high of 2020. In the Asian session, the index entered a downward range of 101.51 and 101.82. At the time of making material for this video, the US dollar was trading at 101.90. However, the US dollar will remain bullish momentum in the long term if it consolidates above 95.50. This is the key indicator of the 200-day moving average. The temporary weakening of the greenback definitely affects its major counterparts because of the economic situation in the country and other factors. The dollar-yen pair has been steadily declining for some time amid the widening gap between interest rates of the Fed and the Bank of Japan. Last week, the dollar-yen pair fell to a 20-year low of 129.40. However, on Monday, the yen took advantage of the US dollar's drop. It rose slightly as a safe haven asset. In the Asian session, the yen climbed higher. At the same time, the pair declined to the level of 127.94, consolidating between the resistance level of 128.22 and the support level of 127.32. It's still located above 128. This is why the forecast for the Japanese currency are negative. The IMF also voiced quite a gloomy forecast for the Asia-Pacific region. It expects a more noticeable slowdown in China's economy. As for the Asian region, the bank stressed the risk of stagnation, namely an economic downturn and rise in inflation. However, the outlook for Japan was more optimistic. The core consumer price index published today came out at 1.1% per annum. It seems that the Bank of Japan's strategy is working. Policymakers have repeated many times that stability is important and rapid currency swings are undesirable. They also noted that they would closely watch the yen's moves. Given the inflation data, the Bank of Japan's decision not to tighten monetary policy is justified. The Fed and the ECB cannot follow the same strategy as inflation in both countries have already hit all-time highs. The Reserve Bank of Australia is also limited when it comes to ways of supporting the economy. Currently, there is a political uncertainty in the country because of the upcoming federal election. For this reason, the Reserve Bank of Australia is unwilling to change the parameters of a monetary policy. So, analysts expected the Reserve Bank of Australia to adjust monetary policy at the June meetings. Besides, the market situation is rather tense now. Lockdown in Shanghai has been extended and Beijing has launched mass coronavirus testing for residents. Apart from that, some districts have been locked down amid a surge in new cases. And this news is rather negative for Australia, as lockdowns in China may affect exports. If so, it may trigger a sharp fall in prices for commodities and other goods. There are also concerns about a drop in demand for raw materials due to monetary policy tightening by the Fed. Commodity prices and the Aussie declined due to lockdowns in China. Another bearish factor for the Aussie was the strengthening of the greenback, as the crude oil is quoted in the US dollar. The Australian dollar rolled back to a two-month low, while the US dollar has approached a new high. However, in Tuesday's Asian session, like the yen, the Aussie gained momentum thanks to the weakness of the greenback. It grew above 0.7200. At the time of preparing material for this video, the AUD-USD pair decreased to 0.7196. It began to consolidate in the daily range of 0.7171 and 0.7232. And some analysts believe that Friday's closing level of 0.7244 acts as the key resistance now. And that's all for now. Feel free to leave your feedback if you have some questions. Be aware of the latest market news together with the InstaForex TV channel. Don't not miss our next video review. See you tomorrow.